Market conditions majority bearish. We're seeing futures up slightly this morning, 0.34, still running into that rejection area, that 618 retracement. We've got our swing high point, swing low point on the current trend. Again, this is S&P 500 futures. We're seeing the 618 of that counter trend. I've talked about this retracement being counter trend to this direction. We've got the two perspectives here. This is the weekly time frame, so the real big picture here in terms of the last couple of years, going back to 2002 and 2003. The retracements now pulled us all the way back to that 50% area, and now we've been working our way back up here. So we're just sitting at this range where we started the selling before. We're pretty extended in that overall long-term trend, but had a pretty decent retracement. Now we'll see if we can continue to hold this ground. If we retrace back, be watching for that 5,500 range and essentially be watching for this area as well. If we pull back deeper than where we're at now currently, be watching to see if we hold up for some support here. This will be pretty telling if we can either close up from where we are now or if we retrace back and hold this 55 level. We're going to be dealing with the Fed and interest rates a lot this week, today and moving forward, so that could create some volatility in the markets here. That's S&P 500. Let's take a look at the breadth of the market here. S&P 500, we're seeing that number of stocks above the 50-day moving average sitting right at 50 now. So we're essentially at equilibrium on breadth, and that's also telling, pretty telling story of where we're at on the price pattern as well. So right in an area where we could start to go either way, and news is probably going to start to be the catalyst to drive that, and as it always has been, dealing with tariffs, dealing with interest rates. It's important to focus on where we're at in terms of price patterns as well versus what news items is going to move the market. We want to manage risk based on what price activity is telling us, and manage risk accordingly instead of jumping back and forth based on one or two news items. Let's take a look at volatility here. VIX back below that 25 number. Ideally getting back below that 20 number for a good solid bull market. So it's still holding pretty high. Volatility is a bit higher, a little bit of pent-up anxiety potentially of a downturn, and that also could drive us the market back down again if we start to see volatility moving higher, or vice versa. If the market's going to move, volatility is going to spike. But it's what we're looking at is where are we at currently? Could we move higher or lower from here? And we could move deeper in below that 20 number. We could also spike and send things back up again. Let's take a look at interest rates. The short end of that yield curve, we're seeing majority bullish here at 10 and 4, and retracing back down into that 82 range, that 382 retracement level. The longer term trend on short rates, we want to see that continue to move higher, and that means that rates are going lower. So we're seeing that currently. The 2-year, if we take a look at that trend, that 2-year is still trending lower, getting some volatility right here at this current level. That 382 had a lot of volatility the last couple of weeks. Let's look at TLT. TLT, that longer end of that yield curve, is still in this longer downtrend. Would like to see that one start to find some support right here and start to trend back to the upside. Has yet to really do that. If we look at that corresponding 10-year yield, we've talked about this compression. It's jumping around by the minute. It's just there's a lot of indecision on rates right here, and like I say, today could be a particularly in the interest rate realm. Dow Jones Industrial Average running also into that 50% 618 retracement zone. I wouldn't be surprised to see a little bit of a pause right here. We've had a pretty strong rally. If we can get some retracement, pullback, that'll start to prove who's in control right here. If the bears are going to show up aggressively once again, or if we are going to get bulls that can hold this level. Currently, we're seeing 7 and 7 majority neutral essentially on triple Qs running up again. You can see the rejection there at that 618 starting to pull back. Same story on triple Qs. This range right here, 471, 487 is going to be essentially the playground location to be aware of currently where we're at right now. IWM, Russell 2000, seeing a little bit of strength here as well. All 5 of those indices are relatively similar price patterns. The Russell is a little bit weaker in its trend. S&P and Dow and Nasdaq have all retraced all the way back up to that 618 based on your swing low, your swing high, your swing low, and then your counter trend move back up. We're only to 382 on Russell, and those are your small cap names. Those are your risk on trades, and the market's just not super interested in those, and they sold off pretty hard as well. So that's still relatively telling on market conditions. So is oil and gold. USO, we saw a bounce. We more than likely will see a bounce and a lot of bullish attempts or volatility at these ranges on oil. We'll see if that holds up. And if we're oversold and extreme enough, we're still in bearish momentum on the daily time frame here, meaning that we're not above the 236 location based on that trend, and that's still, we could bounce back up. That could act as additional resistance. That would be the overall bias still, but you can see there are some attempts for some buying. That was up, oil up 3.5% yesterday. Gold, let's take a look at GLD, seeing some volatility there as well. This price action, we talked about the 236. It's just a powerful momentum location. Gold holding up there as well and continuing to march back up again. So back off to the races again. And we'll see how long this lasts. The higher it goes, the harder it's going to come back down again. But we're definitely in that kind of that exuberant phase of the momentum area, just continuing to get more and more buying at these locations. And it's bouncing at the right place. You can certainly continue to trade that, but just be aware where that trend is at. It's not early in the trend. We're very, very late in that oil trend, in the gold trend, and it could certainly use a bit of a retracement. This is that scenario where you say, man, the world is coming to an end. Should I be buying gold? Well, probably not right now. Okay? Even if it had one more real aggressive spike higher, you're going to get a lot of selling that starts to come back in when you have expansion that is this far apart. So be aware of that in gold currently. SLV, let's take a look there. We talked about SLV as a potential opportunity in that 236 location. It could have a stronger breakout than gold if you see rotation from gold over into silver, or even money just coming back into silver. If we start to see if we get more trade issues, if we start to see the dollar continue to slide, which it's holding up so far, but still solidly in that bearish trend. Again, almost the exact opposite of gold, that counter trend move here where gold is in the bullish pattern, and dollar continuing to show some weakness overall. Let's take a look at some stock ideas. Seeing discount retailers, Dollar General holding, confirmation bar back into momentum. Seeing a lot of gold names in here today. We've got CMCL, which is a really nice looking pattern. Also big volume coming in back above the 236 location. That's a nice looking pattern. Also seeing Royal Gold, which is a little bit bigger player, still similar type price pattern. And again, as gold's moving higher, and these guys are, that's their product essentially. So you should see some profit increases. They're not going to go to the moon because it's a fixed range, but they certainly could see a pop from here. That'll do it for today's update. Everyone have a fantastic day today.